Excellent fade there by producer Hicks. Welcome to the morning market briefing. It's Wednesday, August 3rd, 2022. Pelosi is in Taiwan.
Not anymore.
Well, yeah, she briefly was in Taiwan. We kind of sort of watched her land via Twitter. I don't know. There was a lot of reports on Twitter that seemed like things might really get wacky. There was a poll in our investment chat that I think Tom put up, over under on number of world wars at end of day yesterday. The over under was set at 2.5. The under hit, so I guess that's a positive. Pelosi says she's not going to abandon, the U.S. won't abandon Taiwan. China has announced a number of sanctions and just kind of tactics kind of in response. But overall, I mean, it doesn't seem all that much conflict occurred.
Yeah, I think it could definitely have been worse. I think we'll see on Sunday, once we get through the military exercises, which are going to happen from Thursday to Sunday, where they're basically going to surround Taiwan with live fire exercises, not over Taiwan, mostly in international waters. But nevertheless, I think once we get through Sunday and then on Monday, then we'll kind of be through the meat of this.
Yeah, so there's an interesting thing that I saw on Twitter last night that was trending that I guess is a Russian proverb that is very similar to the boy who cried wolf. And their version is China's final warning, which the formal definition is referring to a warning that carries no real consequences. So it's potential that that's kind of what we're looking at, was they were all fire and brimstone until it came time to fire off the fire and the brimstone. And they were just like, never mind. So it was interesting, but I mean, it definitely could have been World War III yesterday. Would have been very interesting if Nancy Pelosi had become Archduke Ferdinand and set off a world war. But, you know, unfortunately, business as usual today.
Yeah, it's I don't know that I would say unfortunately, but the military drills are particularly odd. I mean, it's kind of the teenage dude that sees cute girls on the beach and goes and does push-ups in front of them to just show how strong he is. And I feel like that doesn't really work. Yeah. I don't know. I mean, it's like, cool, you got a military. We're aware. We're right here.
Yeah.
Just kind of a weird, I don't know, weird flex.
The sanctions could be impactful because Taiwan does produce a lot of semiconductors. So to the extent that I know they're already sanctioned Taiwanese citrus, but if for some reason and the drills are going to have an impact on the ports here in the next few days. So if those persist longer, then it could exacerbate a chip shortage. But beyond that, right now, I wouldn't say there's a big economic impact.
And I think the sanctions on citrus make a lot of sense because there's been a lot of COVID-19 in the shipments.
So that's what they say. Yeah.
Yeah.
So as we've often discussed on the show, COVID comes from citrus in Taiwan. So kind of odd. I don't know. Let's talk about oil. We were just watching on, was that CNBC or Bloomberg, whatever. Commentary on oil. OPEC Plus says they're going to propose 100,000 extra barrels a day for September. That's lower than the 640,000 additional that they were doing, but it's technically an increase, albeit the smallest increase in OPEC history. Kind of saying, yeah, we hear you, Biden. You want more? Here's a little bit more. We're technically doing what you asked, but not really. Think that has any impact on things?
I think if anything, oil goes up on this. I think that Biden was hoping for significantly more. There's apparently right now there's a 2 million barrel a day deficit. Right now, the releases from the Strategic Petroleum Reserve is helping to offset that. That's 1 million barrels per day, but those will be done by the end of September. So you're going to have that 1 million barrels coming off and then 100,000 coming on when you already have a supply deficit. So the math just doesn't add up. Basically, they're saying, look, we did what you asked. We increased production, but they did it by about as little as you could. The only thing that they did that may have been a little bit more was they did do 100,000 increase in production, not just in the quota, which is a bit semantic, but the worst thing would be a 100,000 quota increase. But they did do 100,000 production, but nevertheless, I mean, that's 26,000 barrels a day from Saudi Arabia, which doesn't even fill one ship. So
that's crazy. Crazy. We did have a question actually from a client that listens to the show some. He was asking, what's the strategic purpose that we're trying to achieve when we sell oil out of the strategic reserve?
You're trying to add to supply and basically smooth supply disruption. So where, you're not doing it to make money, you're doing it to ease the supply. You should, in theory, make money off of it because you want to add to the strategic petroleum reserve when the oil is cheap, kind of build your inventories so that if OPEC was to shut off supply, you have stuff that you can rely on and continue to fuel the country. So that's a strategic role that it plays. And so that America could continue to function and continue to move despite, for instance, OPEC cutting off production. But, right now we're doing it kind of to ameliorate the high prices that we see internationally.
And it's not been all that effective.
It's difficult to tell. Yeah. I mean, I think there's definitely been a correlation with the additional releases that they've had recently with the top in oil prices, but there could be a number of factors influencing that.
We got JOLTS job opening yesterday. We got the data at 10 a.m. We kind of previewed it. Job openings fell to 10.7 million. The estimate was for 11 million. Ben, what stood out in terms of just some of the finer points on the data?
Kind of not so much, just kind of a boring release. It was moving in the right direction, down 600,000 on a month-over-month basis, which is basically 6% of the job openings just gone. And that's good news if you're the Federal Reserve. We want to see continued movement down there from their perspective, but it does suggest more tightening in the market, especially on the retail trade side, where job openings fell down to 5.1% from 7%. Interestingly, though, quits were relatively steady, layoffs were relatively steady. So this was related more to job postings than quits or layoffs or even hiring.
Tom, we had Jim Bullard speaking because, as one of you all said, no one likes to hear themselves talk more than Jim Bullard, the president of the St. Louis Fed. What commentary did he offer? Anything insightful? Anything you agree with, disagree with?
Man, I thought his revelations were pretty shocking because he basically is just sitting in on the morning show on CNBC and just kind of one-off answering questions, helping people interview. He just interviewed the Biden gasoline czar. Man, he's just it seems like the Fed has less of a handle on things than they thought. I mean, his direct quote was, they were like, what do you guys think about inflation? He said, quote, "So our inflation forecasting hasn't been good here, so we'll have to get to the bottom of that. I wanted to increase rates faster. I had to look up what expeditiously meant." So that's pretty questionable considering these are some of our top economic minds. There's been a number of Fed officials that have come out in the last 24 hours, starting really yesterday afternoon. Mary Daly, the San Francisco Fed president, basically came out and said, there's really no need to pivot. We're going to continue to attack this thing. And that sent rates moving up higher, which I think is probably more in line with where we need to be. I think Bullard's comments this morning are the same. We're essentially saying, we got to keep raising rates. We're going to keep doing it until we have to. He was asked whether or not he thought we were in a recession. And he said, and I quote, where is it here? I scrolled too far around. Recession is the eye of the beholder. And then a follow-up question saying, hey, it looks like futures are indicating that you're going to cut rates next year. Do you think that's an indication that's when the recession starts? And he basically was like, it's impossible to tell. I mean, he's not really saying much, but I think the message is clear coming out of the Fed in the last 24 hours that we're probably going to get a number of rate hikes towards the end of the year. The end range is probably going to be somewhere between 3 3/4 and 4%, with more rate hikes towards the front. So if you look at futures, it looks like we're somewhere between 2.5 and 3 hikes for the next meeting,
which is a big change.
Big change. Yeah. From the potential, we're going to stop potentially and pivot, or we're going to do 25 going forward. So I think that we need to buckle up. We need to be ready for additional rate hikes and higher rates heading into the second half of the year, particularly considering we've seen such a buy up of bonds on the long end in the last, call it month and a half.
Yeah. Meanwhile, on the economic front, Robinhood announced layoffs, not necessarily surprising. They laid off 9% of their workforce back in April, 23% getting laid off right now. The letter to employees was opened with "Dear Robin Hoodies." I don't know how I'd feel being called a Robinhoodie and then being told that myself and 25% of the company essentially is being fired. So I don't know. I continue to think this is a company that should not be taken seriously, but I think we're going to continue to see that trend. I mean, we've been talking really for the last 2 months about some of these more startup oriented, younger tech companies really having to make some changes and figure out how to make things work. Robinhood now making moves. I mean, in terms of timing, Ben, Tom, either of y'all, I mean, how do you feel about where they are? I mean, do you think they are early enough in making this move?
I mean, no. I was gonna say no as well, but I think it's pretty indicative of the difference between 2022 and 2021 in terms of who's trading and why. I saw a buddy over the weekend who during the 2021, the GameStop, the AMC thing, was texting me all the time about all these trades he was making. And when I saw him on Saturday, he basically said, man, I haven't traded anything in months. I'm not, everything's kind of going down. I've sort of lost interest in that. And, I haven't made any trades, which I think is probably the case for the average Robinhood user. Bitcoin is the same thing. A lot of these people who are really, really fired up about speculating in the markets now have taken a kick in the teeth and, are on the sidelines. And I think that plays directly into Robinhood having to lay off people.
Yeah, as it turns out, it's not that easy.
Yeah, when things are hot, Robinhood's a great place to trade. It's it's cool, it's interactive, it's where young people are trading. But at the end of the day, when young people stop trading, it's not cool and it's not interactive. They don't really have a market, and they've got significant competition with Schwab and TD and Fidelity.
PayPal announced cost savings being pushed pretty aggressively. We mentioned the Elliott Management active investor position. I think, when was that? Last week we talked about that. That's been confirmed. Accounting has become more aggressive. They announced a new $15 billion share buyback plan. Ben, stocks really kind of ramped up in after hours trading and pre-market trading today. Closed yesterday at $89 a share. It's at 102, up 14%. Do you think that reaction is appropriate?
I think sentiment on the name was so bad. Having said that, I think that if you had told me one way or the other I had to bet on something on PayPal right now, I'd probably take the money and run, because the accounting is a lot more aggressive. They're making a lot more adjustments. They're doing a bunch of restructuring to lower costs. They do guide for revenue acceleration in the back half of the year, but they missed on accounts. They missed on revenue. They missed on number of transactions. They missed on the amount of transactions. They missed on every single metric, but somehow their earnings were better. It's because they're stripping out a bunch of earnings, a bunch of costs that are one-time in nature, which, I ultimately, I think PayPal is kind of a microcosm of the market and what we're seeing, in that it's like reeling in a big fish. And the fish is going to move from side to side. And then every once in a while, it'll kind of thrash around a little bit, and then it'll calm down, and then you kind of reel in a little bit more. And I think that's kind of where economic gravity is right now. And so you see this noise going from side to side, maybe even pulling back a little bit. But that just reel continues to tighten.
Switching gears a little bit to Starbucks. I was not necessarily impressed by their quarter. China continues to be a struggle. Stocks up about 2%. Ben, what's the market seeing, and what are they viewing optimistically?
They really like what Howard Schultz is doing. He is very much seen as the savior. He even talks about, his unique understanding and appreciation of the Starbucks brand. He talks about how some of the problems were COVID related, some were a function of not being focused on the long term, and many were self-induced. So here comes Howard to save the day. He says that he's committed himself to stay as long as necessary to ensure the fact that the new CEO has a soft landing. Ultimately, it's pricing there. Ticket price was up 8% in the US, driving overall comps at 9%. It seems like that's going to be the MO going forward, in terms of, transactions may go up a little bit, maybe go down a little bit, but really the growth is going to be driven by ticket price. So it really goes down to a bet on Howard Schultz, and if you think that he can really turn around this company. Tom has more intimate experience with that than I do, having worked at the company. But he does deserve some benefit of the doubt. But I don't know. It's very much kind of Howard Schultz, the savior of Starbucks.
Yeah, I mean, he's done a good job turning around. He turned around last time he took back over. I mean, obviously, he started the company from the ground up. The question is, at what point is Starbucks going to reach an escape velocity where they don't need their founder to be at the helm? You know, they've basically been on this weird trajectory where it's everything's great. Howard Schultz leaves, everything's terrible. Howard Schultz comes back in. You know, it's at some point they just need to find a way to transition that to someone who has the vision to keep that company going. But, you know, he's very self-promotional. Last time he turned the company around when I was there, you know, everybody got issued a brand new copy of his book. He had to come in early for a special meeting in order to be introduced by video to his book. So, I mean, he definitely loves it. He loves the applause. And, you know, he definitely had a bunch of those weird meetings where he was talking about running for president against Trump, I guess 6-7 years ago now, which were weird. But
I think in
was that 2020?
3 years? Yeah.
Was that 2020?
Yeah.
Yeah. We watched it. It was weird.
Yeah.
So he's a character. I mean, he's an interesting guy. He's he's done a lot. He sold the Supersonics to Oklahoma City, which Ben is really pumped about. But, you know, otherwise he's a really good guy.
Last thing we got for today, microchip and advanced micro devices both reported yesterday afternoon. Ben, what similarities do you see, differences? How do you think those two companies are positioned?
Consumer is weak. PC outlook is now down in the mid-teens. If you look at AMD couldn't really, it took market share from Intel, but really couldn't take all that much. They are seeing a little bit of mixed even on the data center. The enterprise is, taking longer to close deals, which is something similar to what we saw from ServiceNow. The cloud is continuing to drive growth there. And then on Microchip, basically Microchip said that they're going to be extremely robust to the cycle because of their strong industrial and automotive presence there. They have preferred supply arrangements that go through a couple of years. So I think Microchip's in a little bit better standpoint than AMD, just because AMD has more consumer aspects than Microchip. So I would continue to favor something that services large customers, that's mission critical and a relatively small cost piece of their overall cost structure, which Microchip is and which AMD is not.
Excellent. We're going to wrap it up there. We'll be back tomorrow at 8:30. Futures on the equity markets almost across the board. Dow, S&P, NASDAQ up about 0.5%. Oil up about 1.7%. So we'll keep an eye on that. We'll report back tomorrow morning at 8:30. Talk to you soon.